Hey, Jack from Alpha Charts with a state of the market video. Today is February 3rd, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, thank you all for watching the video. If you haven't done so, please like and subscribe to my YouTube channel. It really does help me out. And you can find me on Twitter or X at AlphaCharts365. I share stuff all week long, mostly market related. If you really like my stuff, then consider joining my subscriber group. It's $10 a month, so it's super cheap. Basically, made so that everyone can afford it, but it's built one for the person that works full time because I'm doing a lot of the research and then sharing it with you. And two, it's built as a full service subscriber group, meaning I'm giving you in-depth market videos like tomorrow I'll do like a 45-minute market video explaining everything that I'm watching. I give market notes. I give midweek video, midweek market note, daily scans, posts that I just for subscribers with my thoughts on what's going on in the market, chart requests for subscribers that want a second opinion on a chart, and tons of bonus content and questions answered for all my members. So again, for $10 a month, there isn't a better deal out there. And again, it's really a full service subscription, but for only $10 a month. So it's a great deal. Anyway, at Alpha Charts 365, click on the subscribe button. It's really easy to do right through X. Okay. Let's get into the charts. So we have the SPY with a beautiful base, and things have really, gone nicely, right? As far as price action goes, things are coming up, and we're gonna zoom in here to, you know, these all-time highs. Um, Again, is price getting extended from here? It is a little bit, but that's qualitative. It's not really quantitative, right? As far as that goes, it is breaking the trend line. As long as it stays above, we'll call it 475, right? If it stays above 475, we're talking about price, even 480 maybe. Stays above 470, that's absolutely fine. So a little pullback to the 23-day, a little shakeout, 2.5%, something like that. That would be a total acceptable thing to consider. It's done it here, it did it here, right? Why wouldn't it do it again? Um, so let's see if other charts agree with that type of idea or if they don't, right? That's all we can do. So we have SPY at 495, almost 494 change, 495 or 500, I should say, maybe a psychological level. So there may be a little more upside to go potentially. But, it does shake out to the 23-day and even to the 50-day every so often, right? Let's look at RSP though. RSP, which is the equal weighted SPX, has not broken out to all-time highs. So there's a little divergence there. And actually, it's within a range since this December 14th, which I think this has been a very important date, December 14th, because under the surface, we've been having a very choppy market. And so it hasn't really fallen all that much, but it really hasn't advanced at all either from December 14th. So again, a very sideways move for most of the stocks, right? For most of the stocks in the S&P. 50 days catching up. And again, as long as this, we'll call it 155-ish area holds, I think everything's fine. If things fall back below 155, 153, 150, I think it's a different scenario. But until that happens, just a choppy sideways, maybe even frustrating market out there if you're not in the right names. And the right names being things like SMCI, NVIDIA, and Meta and such like that. Okay, so here's the Qs. And again, same idea, big base. This one has not exceeded the trend line yet. Back though to all-time highs. And there's your 50-day at 405. Again, if there's going to be a pullback of some sort, that is where I think things could probably go and just retest. So again, this is not like a bearish narrative or anything like that. It's just saying that things have kind of got maybe a little ahead of itself And maybe they're stalling out just a little bit over here. And again, maybe they're not, right? So again, we're going to keep going through this video and see if there's other things that corroborate or don't that idea, that narrative. Looking at equal weights, maybe a little bit more room to the upside, another 2-3%, and then to make this all-time highs, right? And that's an area that we've talked about in the past that may offer some supply for the equal weighted Qs. We'll call it $90 or so. So it's not that far up above. Um, as far as the structure goes, again, can't quite make that next high, hasn't done that here, but it's not really falling apart or in the 23-day held here. So there's really nothing to be too bearish about either in this chart. Now, listen, it gets below, $85, right? Price I'm talking about. And then, you say, okay, maybe we're coming back for a retest of the $80 range. Again, not overly bearish, but just a natural retest that could potentially feel worse than what it is. Looking at mid caps, MDY, there you are. Mid caps just consolidating right back to, almost their all-time highs, right? Which is back up this way. But this kind of just is basic area. And we've had really higher lows in general. We'll take this one out. But for the most part, higher lows all the way, kind of VCP-esque. Um, you know, couldn't make a higher high here. That's notable, right? That's notable, but not enough for me to, worry too much. Maybe we got this little trend line here, and I think we need to get above 510 for the mid caps to really keep going. And I think they could, right? There's nothing in this chart that doesn't say they're not going to. I think above 510 is really, really important. If we break 500, 494, and get below the 50-day, that would be a much bigger problem. It kind of in between there, but I really do think about 510 and things were just fine in the mid cap world. And then let's look at IWM. So IWM been a little bit of a disappointment, right? We were just going back to here, since this is 2021 now, this is 2 years ago. Um, Came back down here and really cannot get out of this 200-ish area. It kind of hit it here, here, here. We thought we had something going here. It didn't. Maybe thought we had something going here. Significant lower high back in this 200 range. Still sellers there. That's basically what it's telling me. Still sellers there. It's really right back to the 50-day. And it's really at the decision point, right? If it breaks 192, I think a retest of the 200 and maybe even the low of the range would be very possible. 165-ish, 170, somewhere around there. So, yeah, that's it's kind of disappointing, the Russell. Nothing more to say about that. So, as far as indexes go, it's a mixed bag. The cap weighted stuff is doing really good. Equal weighted stuff has a little bit of indecision in there, and including the IWM, which is mostly equal weighted as well. Let's look at XLF. XLF, again, doing great, right? We had one little shakeout day right here. It wasn't barely even a shakeout day. Actually, this was a shakeout day on the first. But really, very strong still. Financials as a trading vehicle looks great, but also as health of the market looks very, very good. SMH, let's look at SMH. Super strong, right? We had the base, really led the breakout, kind of went parabolic here. There's your kind of bull flag, and here's kind of a break of a bull flag. So again, SMH semiconductors cap weighted look great. Now I'm going to go into here so you see this is sorted now by percent of holdings, and you can see NVIDIA is 23%. By the way, this is DeepView I'm using. If you're interested in this software, go to deepview.com. So NVIDIA, Taiwan, Semiconductors, AMD, Avongo, right? That makes up roughly 50% of SMH. So again, knowing what you're buying, right? That's important. We'll go back. XSD. This is the equal weighted semiconductors, and it shows a very different picture. The other one was bear flag breaking higher, and this is into resistance under the 50-day. Very different picture for equal weighted. So really, there's 5 names or so in the semiconductor world that's outperforming, and everything else just really isn't, right? There's not much more to say about that. And that's a concern. That's a concern because, during good markets, we have everybody rallying, not just a handful. Something to consider. We'll look at XTN. This is the transports and equal weighted transports. Again, trying to make this base. The 200-day held, it keeps retesting it, and we do have a significant lower high here. So again, some questions in the transports. Let's look at IYT. This has been battling a trend line going back to 2021, and we're right back there, and it's trying again to break out. I think a break above 265 is a big deal. A break, close below above 265. It's a big deal. If transports can do that, I think that's definitely a positive for the market, right? Looking at home builders, since that December 14th day, just very choppy home builder action. Not a lot to say. 50-day is catching up, and this 100 and 305 area is could be significant, and looks like it is significant. But I like that the 50 days catching up and price is still above it. Below 95, 96, I think things are more problematic. Looking at XHB, it looks pretty much exactly the same, so we won't go into this one too much. So looking at transports, they're at resistance potentially. Housing, choppy action. A little indecision. I guess that's the best way to put it. Equal weights. SMH, equal weight SMH is the one that probably gives me the most concern. Let's see what the internals are telling us. So we got VIX, which is still very low, right? Under 14. So either we're in a bullish market or everyone's on the wrong side of the boat. That's what those are the two options, right? Either this is a bull range, which it is, or everyone doesn't see what may be coming and they're on the wrong side of the boat. Looking at credit spreads, they kind of spiked early in the month on the first, and really then turned right back around. So nothing to see in credit. Bonds are not worried about anything, right? Credit's not worried. Let's look at percent of stocks above the 50-day. This is one of the ones that I think we have some more to go here. Right? Every time this has gotten into my red zone, it has pulled back to, we'll call it between 20 and 30. Maybe sometimes a little bit more, but usually not less, right? Eventually, boom, red zone, boom. This one didn't quite make it, but still went back that much. Red zone, pulled back eventually to that 20 to 30 range. Red zone, pulled back. Red zone, pulled back, right? Red zone, pull back. Even didn't quite make it, and it pulled back eventually before it went back up 35. Didn't quite make it, pulled back, right? So you can see over and over again what happens a lot of times after it hits the red zone. And we haven't quite gotten there, which again tells me that there could be further weakness, until this indicator gets into that at least 20 to 30 area down here. So that's definitely a strike against near-term market, not long-term or even medium-term. So your time frame matters. So that's something to consider. Looking at the put call ratio, we did have some extreme bearishness right here. I think that's contrarian wise a positive for the market. We like when everyone's on the wrong side of the boat, and so far they've been. We'll see if that comes out or not. But right now, indexes, we're talking about indexes now at this point, um, have gone up quite a bit since this January 10th. So that was a decent signal that things are still okay. Doesn't mean, how long does the signal stay in force for? It's tough to tell. We don't really know. But it's been a month or almost, 3 weeks since the signal. So eventually it's going to, wear off, right? What else do we have here? Let's look at the dollar. Dollar is big move in the dollar on Friday. Again, I'm thinking this 104, 104.20-ish area. That's what the area I'm watching. If it gets above that area, I'm much more concerned, right? We're close to it. So there is some more movement that can happen into this area. That would make sense. That'd be fine. We get to 105, 104, 875, something, even 104.50-ish. I'm more concerned, right? Above 104.50-ish, I'm much, much more concerned. Big picture, there's a chance that this could be some sort of bottom, right? I don't think this trend line will matter. Yeah. This would be the trend line that, something like that. Line of best fit, right? That's what we're going to call it. That would be the current line of best fit. And you can see how this would be, above 105-ish, and that could be an issue, right? I'm going to take it off for now. So we have that, and then we have, so dollars working against us as well as the 10-year. And we'll just go to a simple line chart because I think it looks nicer. And you can see how went from basically 5, right, to 3 3/4, higher low, and now it's trying to, we'll see if it bottoms or not, right? If it gets above, 4 1/4, again, I think there's a big, big time negative on the market. So these are things I think we need to watch: the dollar and the 10-year yield going forward. Equal weighted semiconductors also showing some issues, as well as breadth hasn't really washed out completely yet. Those are the bearish side again, and I think it's more near term bearishness and not really full. Like I'm bearish like the whole year. I'm bearish. Maybe the next couple weeks. Maybe not even bearish. That's the wrong word to say, but saying that there could be some more choppy action. That's probably better, and maybe some indecision if this continues. That would be my better way to put it. But midterm, longer term, still nothing is showing me that there's any problems in the market. Could that change by next week? Absolutely, right? If the SPY starts, taking out, some of these key levels, that'd be a problem, right? If RSP, where you at RSP? There you are. If RSP breaks below the 50-day, that would be a problem, right? We haven't been below the 50-day, really, breaking below the 50-day since August of 2023, and that was not a good time to be in the market, right? This was actually a very rough time in the market. So again, if we see RSP take out this 154 area, that's more of a concern, right? As of right now, short term, choppy trading. It's been choppy trading, I believe, since December 14th. I think that there's signs that that will continue, at least for the foreseeable short term. And, where we're wrong, price gets above 159 on the RSP. That's where we're wrong. That means breadth is doing better, right? If we see XSD really start to retake these moving averages, above 215-ish, that's where we're wrong, right? That would be fine. If we see transports break out of this trend line, I think that's where we say, okay, things are good again, things are better, goods and services are moving. That's a positive. And again, it's not one indicator, it's the cumulative of all these ideas that paints a picture for us, tells us a story of what the market's doing. And I still think that there's an indecision and a cautious approach unless you're in SMCI, NVIDIA, VRT is doing great, obviously a few others out there. So good luck. I hope you all are doing well. Take care. If you haven't done so, check me out on X at Alpha Charts 365 and consider the subscription group. Again, it's a fantastic, really the best deal out there. So take a look at it. All right, y'all have a great week. Bye bye.